All right, guys. So let's talk about what we got today. What are we looking at? We got jobless claims just about to hit. We had the ADP numbers that just came out. ADP was stronger than expected. So again, that kind of goes against the idea that the Fed may be cutting 7 or 6 times like the markets are pricing in. So far, futures, it doesn't look like the futures are dropping much. The markets are taking it in stride. We'll see what the numbers are coming out here in just a minute for the jobless claims numbers. In terms of stocks, and just jump in when you get those numbers out. What are we looking at, Ben?
Mobileye has gone down significantly. There's about a 50% decrease in their revenue, or that's their projection.
All right, so
Intel's going to be hit. I mean, it's getting hit today too.
That's the one that they spun out from Intel. So that'll be something interesting, and again, that makes sense because we know that the stocks or the semiconductors are down today, even with I saw Nvidia up $1 or so. So it's more the Intel related to Mobileye news out there because of the chips. And then we had Eli Lilly. What was the Eli Lilly news?
They're releasing the drug to consumers, direct to consumers.
Okay.
That's the idea.
Going more to generic, right?
Yeah.
There you go.
So but there's a double top coming out.
So that's popping today initially. So let's keep an eye on that double top area right there. You have anything going on, Paul? What's the deal? What do we have?
So with crypto, at least, Bitcoin right now, after that drop yesterday, is basically back in last quarter's range. So we had started off the year, kind of living outside of it. Nice wick back into it. Right now, we've come back up and we're testing right into the value area high. So the range high right now is a gold pocket right above us as well at about 43,900, so about $600 away. So we're trading right into big resistance on Bitcoin. So it's going to be interesting to see what happens with that when they open.
Beautiful.
Natural gas too had a big run pre-market overnight.
Thank you for bringing that up. Yeah, we actually just exited our UNG in the verified investing alerts for almost 14% gain on that. So I know that's one I've talked about in the game plan quite a bit. Everyone wants to know the natural gas. They got the natural gas itch there, and nice profit today, guys. Great job. And then, do we have any numbers yet coming out in jobless claims, or nothing reported yet?
From if I'm correct, it was 200,000 versus 220,000.
Okay, so a little less files for unemployment.
Yeah,
again.
I might have that flipped. But
Yep, 202. I'm seeing it right now. So 202,000 versus 219 estimate. So again, I think the takeaways from this is that as of now, and we have the jobs data on Friday, right? So tomorrow we're going to get the non-farm payrolls, which is the ultimate signal. But right now, the jobs market seems still strong.
Still hot.
Still strong. It's not, people aren't filing for unemployment. Granted, last week was kind of a holiday week, so maybe that was a little bit of a factor there. But right now, ADP was nice. So so let's get into the trading action and we'll go for it.
Let's do it.
Sounds good.
Awesome.
Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway from verifiedinvesting.com. Hope you enjoyed the little pregame there. We'll see you again. Feel free to comment if you liked it, if you didn't like it. Love the feedback, guys. Keep it coming. All right, we have a lot to discuss today, so we're not going to miss any time here. We have jobless claims out this morning. We have ADP private sector numbers. So again, these are both jobs numbers relative to employment data. The ADP came out stronger than expected. That's private sector jobs increased, more jobs added than the market anticipated. All right, what does that mean? Well, it again puts the market in a position where we know the markets are expecting 6 to 7 rate cuts. Lunacy, in my opinion, but 6 to 7 rate cuts this year. The Fed has said 3. This jobs number is a strong number. It again puts that in jeopardy. We also got jobless claims. Jobless claims coming in lower than expected, meaning less people filing for unemployment. That also tells us that data is strong, that the jobs market is strong. Walk over here with me, guys. All right, so let's analyze what we have going on. So both data points today came in better than expected in terms of strength. Okay, jobless claims better, less people filing for unemployment. ADP private sector added more jobs. That tells us the Fed is less likely to cut the 6 to 7 times the market's pricing in, and we'll see if they even do the 3 times that they have been choreographing to this market. What do we think the market does when the Fed is less likely to cut rates? It sells off. Initially this morning, we were higher on the markets across the board. If you looked at the futures around 7 in the morning or so, ago, they were all higher across the board. Once we got this data, we now see the NASDAQ 100, the QQQ, is down about $1.60. Not a huge drop yet, but following multiple down days in a row, this would now today, if we end down today, this would be our fifth day in a row to the downside. We can see again the technical level right up here. We've fallen down here. We're going to keep a very close eye on where this market goes. I still have it projected out. If we're looking at a target where the market needs to stabilize, needs to hold, this is your level right in here. So again, notice all this movement up, and this is how you follow and find technical levels. You look at the bigger moves, and then where does it flatline? This is consolidation. This is where buyers and sellers are equaling out. That's why price goes sideways. Then we had the breakout. Okay, so if you come back into this level right here, that's your technical area of support. It's right around 388 to 390 on the QQQ. Now, the reason I'm highlighting this area is not only is it support, but this to me would be a major level for whether or not the market can turn back up, or does it break down and do we get a bigger corrective move than just a pullback from this massive move up? Now remember, I said this yesterday, we had the biggest move up in the NASDAQ 100 since 1999. So again, it's kind of insane. Anyone who doesn't expect a pullback, it's insane. Like, that's just the way markets work. They go up significantly, they have to pull back a little. You get profit taking. We talked about taxes, maybe people selling early in the year that didn't want to sell at the end of the year. They're taking money off the table. Now, interestingly enough, we also had some negative news out there in the chip sector. We saw, again, Mobileye is collapsing today. We're going to go over that chart and look at those levels. But Mobileye basically saying that their revenue for the self-auto driving, this new technology is going to be 50% down from what expectations were. Now remember, Mobileye used to be owned by Intel. Intel still owns a huge chunk of Mobileye. So on this news, Intel is now pulling back as well. We're going to look at that numbers or those charts in just a second. But again, that's negative for the semiconductors. Intel down pretty nicely today. Again, is hurting the semis, even with NVIDIA around the flat line. Okay. So let's go on. Now the spiders, remember, spiders don't really have a lot, the S&P. And when I say spiders, guys, everyone knows, or I hope you do, when I say SPY or spiders, that's the S&P tracking ETF. That's the one I trade off of, right? So it is down about 60 cents today, 60 to 70 cents. It's not a huge move by any stretch, but nonetheless, it is down on the day again. Same kind of deal. This would be, again, the fifth down day in a row. Same technical know-how on this, all right? Let's flip over to the spiders real quick here on the chart. Let me bring that up. So same thing, right? So we have the down move here. Where are we looking for in terms of technical levels of support? You still have a level all the way down here, which again is around 458 and a half, 459, but that would be your big level of technical support. Again, notice the sideways chop on the spiders, all right? So if we continue down, these are the levels that you need to look at. And the reason, again, just like I said with the Qs, the reason this level is important is because it is a pivot point. It is a point that if we hold it, we could go back up and make new all-time highs. If we break below it, now you're in trouble. Now it's looking more and more like an M top, a double top, or a Bitcoin 2021 type top. Remember that type of top. You had the up move, the down move, the up move that went a little higher, and then the bigger reversal to the downside. So that's really why this level, and on the Qs, that level is so important to focus on if and when we come back into it to see if it holds. Now, as you could guess, with this ADP private sector news being stronger, as well as the jobless claims being lower, we are seeing that the 10-year yield is creeping up. Now, again, this is something that I nailed dead on, right? We knew that we overshot to the downside after we overshot to the upside. And where's the happy medium? I love pointing this out, guys. Somewhere in this vicinity. Again, 4.5 to 4.4% on the 10-year. I continue to expect us to move back to that level. By the way, this jobs data is showing us just that. It's showing us that chances are the Fed's not going to cut. Remember, the Fed funds rate right now is at 5.5% basically, right? So again, you're at 5.5%. But the 10 years now right around 4%. So what that's telling us, there's a 1.5% difference, or 150 basis point difference between here and here, right? Between 4% down here. All right, now what that tells us is, again, is that as we get economic news like today that's stronger, it tells us that the market has to readjust from expecting so many rate cuts to somewhere back in the middle, where, again, is probably much more in line with what the Fed will probably do in 2024. So the Fed's saying 3. If we go back to 4.5%, we're basically at 4 cuts, right? If you're 25 basis points each one, that would be a 1% cut from 5.5 to 4.5. Boom, there you go. There you have your 4 cuts in the Fed funds rate, or essentially that. And again, it doesn't trade exactly lockstep, but that's the idea behind it. All right, couple other things here I want to go over, guys. I do want to take a look quickly at the DXY. The DXY had come up into some resistance. I gave this line to you yesterday. It has stalled there, so we're going to keep an eye on that. Can it break through? It is up a little bit today on the economic data, but it's not really surging because, again, you have this very nice resistance level right through here, which goes all the way back from here. If it gets through this level, your next stopping point is right up there. That would be your next big level of resistance. Again, same general thought process. We had a big down move to the downside. This is just minor resistance. If we break through, you'll start hitting more major resistance right in that vicinity. All right, now let's get into some individual charts. I talked about Mobileye. Well, I want to talk about that. Apple today, by the way, is also down a couple dollars. They had another downgrade, so it seems like everyone was waiting. All these analysts were waiting for year end because they didn't want to hurt Apple into year end. Now they're in the new year. They're like, downgrade, downgrade, downgrade. And it's just starting to pile on. I actually like that because it gives me opportunities, right? If you're someone that was sitting at home and you're like, oh man, I really want to get into Apple, but I don't want to pay up here. Well, now they're starting to drive the price down. Let them drive it down. Never chase. Remember, that's a rule. Never chase price. Once you chase price, you're basically giving your money away. The market will eventually eat you up and take that money. Okay, so Mobileye, where are we doing here? What's going on? So if we look at this chart, this is a huge drop, guys. I don't know if you guys can see, but this is where it closed yesterday, $39.72. It's trading at $27.10 today, $27.10. Now, again, this is them warning 50% less in revenue. I believe that was the headline. Now, because Intel spun this company off, we don't have a lot of data going back. The only level I have as a tradable level for us that's a safe-ish, and I say safe-ish because nothing's really safe when a stock's dropping 30+%, right? But the safer level where I might consider this here would be somewhere at this double bottom, and the double bottom, again, is right around the $25 level. So at 25 bucks, I mean, you're at $26.99 right now. It's not that far apart. It's not that far away. That's your first level here, again, right in this vicinity, right down here. So we're going to watch that. I'm going to keep an eye on that. Now, the bigger question is, how does this affect the semiconductors, right? So we know that Intel, since Intel owns a bunch of this because they spun it out from their own company, Intel is taking a beating today as well. Intel closed at $47.05 yesterday. It is now trading down at $45.45. So that's about $1.50 downside, $1.60 downside. Now, on a technical basis, what's the level to watch on Intel today? Super simple. See all this consolidation right here? That's going to be your first level. On a price action basis, that's right around $44.50, give or take. We're at 45. So if it drops a buck to 44.50 or so right in here, that's going to be your first level of interest right in this vicinity, all right? Now, after that, if it continues down, there's a gap fill right here. Price point getting you guys that actual level, $42.70, all right? So again, $44.50, and I apologize for my writing skills here, $44.50 is this first level here. Second level again is $42.70. 42.70. That will be your second level. If it continues down, and by the way, it could. I mean, again, Intel's a big company, but these type of things could start to shift the bullishness that has enveloped the semiconductors for such a long time now, that's driven NVIDIA and AMD and all these other ones to ridiculous levels. This would be your last level here today, which again, on a price action basis, this low would be around $41.30. So we're gonna have to keep an eye on this, guys, but this is interesting because we know the semis, and I got to just point this out. I gave you guys the semis. The semi level was just an absolute beauty. And again, into year end, I know there were a lot of doubters because honestly, nothing was pulling back. But again, it is absolutely amazing to look at this chart, right? You look at this chart on the SMH, this is the semiconductors, and you have a pivot going back to the COVID low. So that's like a major pivot low. And you go right through these highs here in this area here, and you connect right through that, and we hit right there. And we now have found ourselves, this is almost a $15 drop on the SMH since these highs. Pretty remarkable there. All right, so we'll keep an eye on that. Eli Lilly is up a little bit on the day. I don't really have much on this, guys. Again, your double top on Eli Lilly. Let me bring up that chart now. They had some, basically they're going to be selling direct to consumer, the weight loss drug. So it's a little bit of a positive thing, but honestly, Eli Lilly's had such a massive run. I don't really see how this moves the needle that much more. The stock's up about $10 pre-market. It's a $600 stock, so $10 is not that much, but you have a double top right up here at $6.31, $6.30, and that would be really the only level you have. Now, could this be bullish consolidation? It could be. It is possible. The only thing I have to say about bullish consolidation that happens after such a mammoth run is it's more prone to failure. It's a good lesson to learn, is that bull flags at all-time highs or 52-week highs have a higher failure rate than bull flags that are near the lows. The near the low bull flags usually play out much, much better than the high ones. Just a little reminder there. It's another cautious thing. Like, I certainly wouldn't be buying Eli Lilly up here. Would I be shorting it? I mean, probably not because of the potential for the bullish pattern to play out, but I would keep it on my radar if I saw a topping tail, a reversal candle, an engulfing candle. These are all very key candle formations that if they did happen, then I think you could potentially short it at that point. All right, guys, let's jump to center screen real quick here. I just want to say thank you to iTrust, you guys. You guys know that they support me. They help me do this show. They are a sponsor. So let's just take 30 seconds to thank iTrust. Thank you, guys. Take it away.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back. We got to talk natural gas. I'm sure everybody out there, I still remember when natural gas was going through my levels to the downside, people were like, oh, he's just insane, all this stuff. But honestly, this is the beauty of it. First of all, I'm not going to be right always. That's just the basis of it, right? I'm a probability trader. Best probabilities, I do 70, 80% success rate, which means 2 to 3 every 10 I'm going to get wrong. Just the nature of it. But I mitigate that, and this is the beauty of this trade, because I sold my UNG today with the live trading room. We did it pre-market already. So again, for those of you out there that don't know, you can buy and sell pre-market, some as early as 4 in the morning, believe it or not, when things start trading. But I unloaded this today for a 14% gain with members at InTheMoneyStocks.com's verified investing alerts, and I'm going to show you exactly why. But the concept here was, and again, I love going over this, is that initially I thought it was going to stop at levels over here, right? Somewhere in this vicinity. But it didn't. It kept on dropping. But what I do, and this is one of the best lessons you'll ever learn, you ask any trader in my trading floor, you saw some of them in the pre-market, pre-game session here, you ask them what the biggest change has been, and it's been legging into positions, especially on swing trades, but actually on day trades as well. And so what you have doing here is, if you buy here, but you only buy 1/4 of your position size, and then you buy more here, and then you buy more here, your overall average is somewhere in this vicinity, and now you're able to really capture that alpha to the upside. So again, it's all about legging in, and that's exactly what I did in this trade. Now, in terms of why I exited here, could it go higher? Sure it could. Absolutely it could. But you know what? You have to start recognizing how big of a move it has been now. We were down at $2.20 on the chart. It's now at $2.75. That's a big move off of the lows. And again, do I think it could go to 3? Sure it could. But am I happy with a 14% gain for myself and for members? Heck yeah, I am. Absolutely. So, looking at the technical levels here as well, just to show you guys real quick here, what I want to just point out is that if you look at this, we have this pivot top here. Oh, let me bear with me there. We have this pivot top right through here, right through this pivot low, and price right through here, right here as well. So again, it doesn't mean it can't go higher, right? It doesn't mean it can't go higher than this. But the point is, As a trader, I've learned to not get greedy. When you get greedy, usually I see my profits go bye-bye, right? So again, you can leg out of positions like you leg in. That's an option as well, but it's all about just saying, you know what? It's had a big run. Probabilities of it continuing up are lessening now, and I think that's important. The higher a chart goes, right, the more the probability, right? When you're just coming off a low, it has a lot of upside energy. But as it goes higher and higher and higher, the probabilities of the gain that you can make becomes less and less, and the odds that it starts to pull back become more and more. And you have to factor that in as a technical trader. All right. On to a couple other charts that we want to talk about here. Of course, we'll cover Bitcoin, guys, for all you Bitcoiners out there. Bitcoin had that big flush yesterday here. The key on Bitcoin, I simplified the chart. I love being simple. Simple is so awesome. So look at this. This is all I have on my chart. All I have. It's a channel, two parallel lines on the daily chart connecting your lows and your highs. That's it. Basically, that's all I need to know. If it breaks to the upside here, where's it going? I've talked about this before, 48 to 50,000. That's what it's doing. If it breaks to the low, where are you going? Very simply, see this flat top right here, right across here, right to 38,000. So you have both sides of the coin here. You have both sides of the Bitcoin, if you will. All right, so again, simplify your charts. There's a lot of traders out there that do very well with a lot of other things. I like to keep things simple. I understand it better. Get too complex and I get lost in it and I start to see indicators that are telling me this, but then another indicator that's telling me this, and I'm like, oh my God, I have everything telling me different things. What do I do? Keep it simple. Bitcoin at this point is safe. Now, when I say safe, it doesn't mean it's not going to make a crazy move tomorrow or today. It means as long as it's in this range, it's kind of dead money in a way, meaning it's just chopping. And it's been chopping since December, early December, right? Really, there hasn't been much price movement. Once it breaks out, or breaks down, that's where you get your bigger move. Very simple. All right, let's look at gold. Gold had a little bit of a pullback yesterday on the chart. If we bring up gold now, let's take a look. We have gold flat on the day, but again, it's continuing to get rejected at this 2075 to 2080 level. I honestly, at this point, there's not a question in my mind. I mean, there's always probabilities, right? So there's always a chance it doesn't break out and gold collapses. But to be honest, the chart, if you look at 100 of these charts, 1,000 of these charts, you'll see 80% plus, probably close to 90% of the time. Once you establish yourself above with a daily closing candle above the line, above this point, that's when the upside should kick in. And I continue to be very, very bullish on gold. Again, the inverse head and shoulder. And I think I've shown this to you guys before, but this is a very powerful thing to look at. Let me do this right now. If we zoom out, let's go to our weekly chart, right? So again, on our weekly chart, we have and bear with me here, Yep. So basically we have our inverse head and shoulders, which is a bullish signal. We take our lowest point here to this point here. I think it's about $450. That means that when we finally do break out, we should go up $450 upside. That's where I get my target. The completion of this head and shoulders should be at around $2,525 to $50. So again, $2,500 plus on the charts of gold. Now, just to show you, and again, I always like to prove my points, right? I honestly don't want any of you guys believing what I say. You should go and do the research yourselves. You guys should back test everything I do, and you should prove it to yourself, right? That's how you really become autonomous in terms of your trading and your technical analysis. And the reason I say that is because, very simply put, you had the same thing. I talked about this game plan in and game plan out. If we look at this chart of oil, right, same sort of formation, except this was the head and shoulders, right? So the gold one is the inverse. It's bullish. This was a bearish head and shoulder pattern. Your neckline was right here. If you take this move and drop that trend line right down, it actually played out perfectly from this break point down here, gave you your lows, and now you can see, again, oil starting to chop sideways. Today, oil's around the flat line, but it is holding relatively fine. Lastly, let's just talk about silver, guys. So again, silver continues to be a little bit weaker than gold. Yesterday had a big down move on gold, on silver, right? Gold had a little bit of a down move. Silver, obviously, percentage-wise, moved down. One of the things in the short term I'm watching on silver, guys, is this trend line here. It's almost a little bit of a head and shoulders pattern, a very minor one, but nonetheless, take a look at this. So let's watch and see. We have a trend line right here, right? This pivot point, and again, this isn't the perfect ideal head and shoulders because it's not at the highs of the chart, but it is relatively close. And so again, you have this pattern, and so I'm gonna watch today. Does it trigger? Right now, we're fractionally below the line. If it closes down here, you actually could be looking at further downside, a measured move again from that high right here, same kind of deal. You could be looking at a $20-ish target on silver. Now again, the only way silver's going down there is if the economy starts to stutter and sidestep, because it's an industrial metal as well as a store of safety. I mean, if the dollar really rips, maybe it would take a little bit out of that. But again, I'm leaning more towards the industrial side of silver. So silver, I still remain net bullish on, right? The bigger pattern chart, and just to show you real quick here, if you look at your bigger pattern, it's still very, very bullish on the chart. I want to just zoom to my weekly chart here. So again, this is your bigger pattern. Your bigger pattern, and this is where you get your bigger time frames, right? Your bigger pattern is this bullish pattern. This is a bull flag, there's no doubt about it. But in the short term, right over here, a little bit, this is that head and shoulders pattern. There's your $20 level. Even if we went down there, the bigger bullish pattern still is intact. So this, again, is where time frames really do matter, where you can get a short-term projection versus a longer-term projection. Longer term, you're going to go to your weekly and your monthly charts and analyze the chart accordingly. Shorter term is daily chart. That gives you 1 to 2 weeks out generally, versus the weekly, monthly gives you 6 months, a year, multiple years out. All right, back to center screen, guys. As always, it's been awesome with you guys. I love it. I love these game plans. I love the response. I think we had over 60,000 views in yesterday's video. If you combine Twitter, X, as well as YouTube, I thank you guys from the bottom of my heart for all the support. When we get to 100,000, I'm going to do a mammoth giveaway, guys. It is going to be epic when we do 100,000 views 5 days in a row. It's got to be consistent. Can't just be one day. But I'm going to figure out some massive giveaway for you guys to reward you guys for tuning in and spreading the kind words. Thank you so much, guys. Have a great rest of your day.